Credits. Allowable credits for a corporation. What are the tax credits available to C Corps? Obviously, there's probably way more than we're going to go over. Not probably, there are. It's just there's only certain ones that are important for the exam. We've got various tax credits available for C corporations, including the general business credit. Now, a common question on this is it is a category rather than one. It is a credit itself, but it's a credit made up of other credits. This includes the investment credit, the work opportunity credit, the alcohol fuels credit, research and development tax credit, low income housing credit, small employer pension plan startup cost credit, and the alternative motor vehicle credit. I'd say more so the investment credit, work opportunity, R&D, and possibly I'd say that those are the ones we see more commonly. A question could say, which of these make up the general business credit? And there you go. You just got to pick which one of these you see. The foreign tax credit, corporations can choose to either take a credit or a deduction for foreign taxes paid. I know we have an example in one of our lessons where we go through the differences between taking a credit or a deduction for foreign taxes paid. The credit is calculated by determining the amount of foreign taxes paid and then comparing it to the proportion of foreign income to worldwide income multiplied by the US tax rate. The lesser of these two amounts is then the allowable credit. And then the minimum tax credit, corporations can reduce taxes owed by carrying forward the minimum tax credit. We've got some limitations and carryovers. Now, tax credits can be limited depending on the specific credit and the corporation's tax liability. Unused credits can typically be carried back 1 year and forward 20 years. Just the carrybacks and carryforwards, I would just always know those whenever we mention them throughout the exam. Now, it's important to note that for C corporations, they got to be aware of these regulations and these credits. Make sure you apply them correctly, especially you as the test taker. You're going to be the one having to do this. When calculating the tax credits and determining their limitations, C Corps have to follow these steps. For the general business credit, if the liability is over $25,000, the disallowed amount is calculated as the tax liability minus $25,000 times 25%. The usable amount of the credit is then found by subtracting the disallowed amount from the original amount of the tax credit. For the foreign tax credit, any unused credits can be carried back 1 year and forward 20. This allows corporations to apply these credits to their taxes in other years, providing them with additional opportunities to offset their tax liability. And then lastly, the minimum tax credit allows corporations to reduce their taxes owed by carrying forward the minimum tax credit. This credit can also be eligible for a refund under certain circumstances. Just general information about these credits. Again, tax credits for corporations, not the most important thing to know. I would definitely focus more on calculating that taxable income, the tax liability, etc. All right, but if you do see any of these, you'll be well prepared for sure. We got an example here on the foreign tax credit. Bridge Company, a domestic corporation, has $15 million of worldwide taxable income, including $3 million of income from foreign sources. Bridge Company paid $1.2 million of qualified foreign taxes during the year. Assume that the U.S. corporate income tax rate is 21%. It paid qualified foreign taxes. Hopefully none of those were bribes to foreign countries or anything like that. Any taxes actually recognized by the U.S. government would be qualified foreign taxes. Determine the amount of foreign tax credit for Bridge Company. Step 1, the qualified foreign taxes were $1.2 million. Then step 2, what's the limitation? Well, we've got the U.S. tax liability is $15 million times 21%. That's $3.15 million. Now, what's the ratio of the foreign source to total taxable income? We've got $3 million to $15 million. That's going to be 20%. Foreign tax credit limitation is going to be the $3.15 million times that 20% we just calculated, which is $630,000. And then step 3, what's the lesser of steps 1 and 2? It's going to be step 2, $630,000. So Bridge Company can carry its excess unused credits, $1.2 million minus $630,000, which gives us $570 back 1 year and forward 10 years. All right, looking good. Powering forward. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.